This summer, we've had a major IPO heat wave. It all started with Lemonade, a company that's revolutionizing, of all things, the insurance industry. And this one came public with a bang 3 weeks ago, shooting from $29 to $69 on its first day of trading. Lemonade's a disruptor. They use artificial intelligence and a terrific digital platform to make the once agonizing process of buying insurance relatively painless. Right now, they do renters, homeowners, and pet insurance, though they keep expanding. Last week, I told you this was a phenomenal story and predicted that Lemonade could have more upside. But I also said you should wait for a pullback before you do any buying because the stock's incredibly expensive. Since then, it's run from 74 to 82. I worry about valuation. Look, we saw a big revolt against valuation, high valuation just in today's session. That said, the business is very compelling, and at the right price, I will pound the table on this one. Do not take it from me. This is an exciting company. Let's check out with Daniel Schreiber. He's the co-founder and chairman and CEO of Lemonade to get a clearer picture of how his company's shaking up this insurance industry. Mr. Schreiber, welcome to Mad Money. Congratulations on that amazing IPO.
Thanks, Jim. Great to be with you.
All right, so Daniel, I got to ask this immediately. Do all the insurance companies hate you because we don't like dealing with them? And I have friends who brag about your app and show me how much money they save.
I do hope they don't hate us. We've got a lot of admiration for them, and I don't envy them. You know, insurance may be the most disruptive industry on the planet, and it's led by amazing people, smart people who see the writing on the wall. But they're managing companies that were founded in the age of the horse-drawn carriage. And it's just really tough when you've got tens of thousands of brokers and code dating back to the 80s, really tough to contend with the challenges of the 21st century. I think our job is easier than theirs.
Well, one of the things that fascinates me is as part of the old school where I have my brokers and they make their calls and they put it out and they come back and I don't know how much money they make and whether I'm really getting good policy, is that it is so ingrained in society that I don't know if any of the companies that are currently in business can pivot to what you do.
No, I think it's genuinely difficult. And at a strategic level, what they're discovering is that things that seemed for the last 100 years to be assets are beginning to look a lot like liabilities. So like you said, you've got tens of thousands of brokers. You thought that that was a fabulous asset. In the age of direct-to-consumer via the app, it's beginning to look like a liability. Or you've been investing in tech for tens of years, since the 1980s, and you've got this spaghetti code that costs you billions to maintain, and it's much more of a black hole than a black box. Is that an asset or is that a liability? Very difficult to transform these 100-year-old businesses doing tens of billions of dollars. Same way, they've been training in their management teams for legacy preservation, not for business transformation, et cetera, et cetera. It's the classic innovator's dilemma.
Yes, and one of the things I would say is they have a counting house, yes, think Dickens, counting house aspect to them, where you're actually a B corporation. I mean, what, you guys just decided that you wanted to be good guys? I mean, are you capitalists?
We are capitalists and we're backed by capitalists. And as you said, we had an IPO recently. But insurance is plagued by perhaps the costliest problem in insurance is distrust. People don't like their insurance companies. They don't trust their insurance companies. It doesn't matter how much money the insurance company has. People don't believe they're going to pay them when the day comes. So when we came to take a look at insurance, and neither I nor my co-founder knew much about insurance beforehand. We've got 20 years as tech entrepreneurs. When we took a look at this sector, we found a sector that was plagued by distrust. People felt entitled to embellish their claims. The brand loyalty was way low. So we wanted to try and tackle that problem, not just the technology. In Lemonade, you buy an insurance policy in 90 seconds. You get paid in as little as 3 seconds. That crushes costs and it delights consumers. But there was a deeper problem to resolve, which is how do you avoid the conflict of interest between me and the insurance company? And establishing ourselves as a public benefit corporation, as a B-Corp, where a lot of underwriting profits goes to non-profits, allowed us to reimagine the whole business model. And in fact, we live in a flat fee model, a lot like other tech companies, but nothing like insurance companies, where you pay me $1, I tell you in advance that I'm going to keep 25 cents on the dollar. And if there's money left over after paying claims and buying the insurance, I'm going to give it to a charity of your choosing. This isn't just do good stuff. It's about aligning interests. So I don't make money by denying your claims, and you'll think twice before embellishing your claims. And hopefully we turn what is today and two-player game, a conflicted relationship between two players, into a trilateral relationship by involving nonprofits as well. It keeps you honest, it keeps us honest, and it's allowed us to climb the ranks to be the #1 most trusted and loved brand in insurance, and we've only been in the market for 3 years, so we're very gratified for that.
All right, is COVID-19 playing any sort of role in your business?
Not what we might have expected. We've found that our business is thankfully incredibly resilient. And in fact, most of the trends that we were seeing in terms of our growth and conversion and marketing efficiencies, which were all progressing really nicely before the pandemic hit, have continued throughout the pandemic. And being built as we are on a digital substrate, everybody works anyway from any browser in the world. You can get into all of our tools. So our teams have been able to work remotely for several months now across 4 locations. And of course, buying insurance with a bot rather than with a broker, there's none of the social distancing aspects. They're available 24/7, empathic as ever. So we've seen all of the KPIs, all of the core elements of our business have continued to thrive throughout the pandemic. Hopefully that will continue going forward as well.
One last question. I know that you've got a great business model. I think you can really crush it. But how long do you want to go losing money and taking over this space? Because you do have to block everybody else. I know that. At the same time, you can't let any of these older guys come in. But we don't want you to run out of money.
No, and the fundamentals of our business are very healthy. So we've got a loss ratio that is on par with the best in the industry. What we're really doing is making investments in the future, launching new products, launching new territories, capturing more customers. And we think that somebody is going to become the iconic incarnation of what insurance should be in the 21st century. Right. And it's a prize worth fighting for. Insurance companies can last for hundreds of years, can do over $100 billion a year. So this is definitely a prize worth fighting for. Classic incumbents are flat-footed going into the 21st century, so we do want to make heavy investments right now. The prize is so big that we could be growing. We're growing at over 100% a year. That's been compounding for a few years now. We think that that could continue for such a long time. This market is as close to unlimited as possible, and hopefully every dollar we're investing now will be returned to us several-fold in the years and decades to come.
I think you got a great story. I really do. And I'm glad to see this industry finally being disrupted. Daniel Schreiber, Chairman and CEO of Lemonade. Great to meet you, sir.
Thank you, Jim.
All right, guys, sometimes you just hear a story and you say, you know what, I'm willing to risk how expensive it is. This is a terrific story. If you want to buy some, after listening to this man, I say it's okay. But remember, the high multiple stocks, of which this is one, are under a lot of pressure right now. Mad Money's back in.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.